Welcome back to the channel. So in this video, I want to discuss a trade idea that I put on right at the close yesterday, and I still feel like it's pretty early in the trade. You might even get a better price than me, and I feel like there's a fairly good chance of success here because it matches a lot of the stuff that I typically look for when it comes to the strategy of an earnings failure. So as we're looking at the chart for Upstart right now, notice that earnings came out on Tuesday, just 2 days ago. In aftermarket, the stock had gone up. This is the aftermarket hours, so it went up in aftermarket. Pre-market went up even higher the moment the cash session opened up, which is the dark background here. The price Upstart managed to sell off. It actually sold off to the point that it finished, I feel like, barely flat on the day. Was it flat? Or was it down? It was even down on the day. So that is officially an earnings failure for us, because as I bring up Thinkorswim, because we are going to model out the trade that I put on. If you look at the live news, you'll see that a lot of analysts raised their price targets for Upstart, right? Piper Sandler did, Needham raised it, these analysts raised it. There's a reason why the stock had an instant move higher, right? At face value, looks like it satisfied everything that the market was looking for. On top of that, as we know, Upstart has a relatively high short interest, usually between 20 to 30%. So you would hope for a short squeeze. Market actually, we still have 5 minutes till market open. You're hoping for a short squeeze. It's happened in the past, but nothing really came out of it, right? That's one thing I was also looking for, to see whether or not this can kind of prompt a short squeeze. That didn't occur, and that's not a good sign. The fact that shorts really didn't begin to cover. I mean, granted, some of this move obviously can come from shorts covering in the aftermarket, but the stock sold off completely. And guess what? The shorts are probably going to come right back into the stock. And in general, the fact that the stock managed to reverse all of its gains on top of its good news shows us the stock is still nowhere close to going on a run. And I feel like that's the parameter that we have to use here. It's just the fact that, hey, at face value, these earnings seem positive, but that still is not enough to move the stock up higher. And as we look at the daily chart here, let me just remove this line that I just put on there. What's probably going to happen? I feel like it doesn't take a genius to kind of look at this and be like, well, if we're not going high, we're probably going to be chilling between this $26 to $30 level, maybe $26 to $32 level, right? It kind of seems like that. We've been here for over half a year now, haven't really gotten anywhere, and it doesn't seem like we're going anywhere with this earnings period. So I put on a trade here, which is this broken wing butterfly. Size-wise, oops, this is for MU. We'll go into my actual quantities in a second here, but this is the idea of it. Now, normally speaking, I like to use butterflies or ratios. Normally, if the implied volatility is high, I will use a butterfly because we benefit from volatility contracting. And I will normally use ratios if volatility is low, because if volatility goes up, it benefits our out of the money leg. But Upstart has relatively low volatility right now. Its IV is low. Doesn't bode well for a butterfly, but I also don't love going to a ratio because it seems like we can kind of chop around here. And a ratio spread, I really want that stock to be moving. But a broken wing butterfly, we try to work around that issue, volatility being low and not benefiting us, by kind of buying. As you could see here, a lot of our contracts that we're buying, it's super far out of the money, and those are super cheap because volatility is normally low. Typically on a regular butterfly, what you'd be seeing is, instead of the quantities, let's say, being 132, it would be 121. Right? So essentially we're loading up the same amount of contracts at the money or closest to the money as we're doing out of the money for a typical butterfly. But here we're buying more of the furthest out of the money, which are going to be the cheapest by far, since the volatility is low. So that's how we're trying to get around this. Now, this is the structure for it. So a couple things to kind of point out here. Blue line represents price at expiration. This is a short expiring contract, August 21st, 2 weeks from now. If price runs up, we're fine, right? We're break even. We don't have to worry about it. Clearly, we want price to go down, right? Clearly, we want price to be going down here. Let me see if I can move the camera over. Oops. Let me see. Okay, I think that's better. I think I fixed it. We want price to move down, right? You could see here at $26. After that, we start to lose money. 26 puts us around bottom of the range. So we are trying to play this range here, right? Because anything below $30, we're looking good, which is right here, which is kind of what price is. Now, there's no guarantee it's going to work out because price can go to 32, 34. Keep that in mind. I tried to price it out a couple times to see if I can kind of get that the slope to come in from here. But to do so, we'd have to be buying the $32 puts, and those are way more expensive than anything else because volatility is low, right? Because we're buying in the money puts, which have a way more intrinsic value because volatility is low, and then we're trying to sell out of the money puts, which have no intrinsic value, obviously, plus volatility is low, as I said. So that didn't quite work out. We're gonna go with this, and as time goes by, as you can see here, obviously this is a positive theta trade as long as price stays within this range here. We're gonna be looking good. We're gonna be looking good. Here is the actual trade itself, right? So again, we are buying the $30 puts. We are selling the 45. What am I saying? We're selling the $30. We're buying the $30 puts. We're selling the 27.5 puts. And then we're buying the $25 puts. We did this in 15. So we bought 15 sets of these, right? But you can see the quantities here. The market's opening up right now. As you can see, though, my unrealized P&L is actually slightly down on the position. A lot of that is fees. I know Thinkers, not Ameritrade, what am I saying here? Interactive brokers, they normally take whatever commissions you paid into that trade and they bake that into your P&L already and into your average cost that you paid. My average cost here is about almost like 19 cents, right? So what I normally would do here, I would go here and I'll put 19 cents and kind of like monitor it from this position. And what is Upstart doing right now? It's down 2% already. I'm gonna try to get this video out as soon as I can though, but that is the trade I have set up here. Again, this meets my criteria for an earnings failure, and at this point in time, I just wanna see it kind of trade between 26 to 30 over the next week or two, and then we'll take it off at some point or another. But that is my trade idea with Upstart. If you have any questions for me, let me know in the comments below. Other than that, thank you so much for watching. I'll see you next time.